Welcome everyone. Today we are going to have a very brief elaborative video on some of the techniques people can use to be able to pay off their mortgage early. We know that most of the mortgage, when you buy a home, depending on the price, most of the mortgage is 30 years. That means you'll be paying certain amount for 30 years. Let me give just example what I mean. Let's say this is the home you want to buy. This home is in Houston, Texas. Very nice home. You can see yourself. The price they say is $230,000. So majority of people when we buy home, usually we go for 30 years contract. Some people go for 15 years, but the most common in 10,000 people, maybe 9,000 people will go with the 30 years loan. So if you go and try to read some details more, you can be able to get the estimate how average you'll be able to pay on a monthly. But this depends also on, will depend on the interest rate you are going to get and the down payment you're going to pay. So for instance, on this home, monthly cost, they tell you, for instance, is about $1,378. If the principal and interest, mortgage insurance, they haven't calculated, the property tax will be around this one, home insurance, the homeowners association fee is that one, utilities, they are not included basically, but they just try to give you average how much you'll be able to pay per month. But it will depend also on with the down payment and all other kind of things. If you wanted to do your calculation, you can be able to do calculation and be able to see how much you'll be able to pay. So if you pay this amount of money, this is the home. Obviously, if you add the interest, in the end, after 30 years, you are not just paying $230,000. You might pay almost nearby 400,000. You might pay almost twice the amount of the home. That's how it is. It is scary. But we don't see this way because, oh, my home is just 900, 1,000 per month. But if you take, let's use calculator. Let's find the calculator and use calculator so that you can be able to see if, let's say, your mortgage, you are going to pay 1,378. That is excluding insurance, but let's say that is the mortgage amount you are going to pay, $1,378 times, let's say times 12, to find 12 in terms of 12 months, or the easiest way, let's say 12 months times 30 years. So this is the total number of months you'll be able to pay until you finish your mortgage, times monthly cost of $1,378. So you see, this is the total amount of money you'll be able to pay. But what you borrowed was $230,000, but what you pay is $500,000. So if you minus $230,000, they are going to get more than the price of your home. So this is the interest only. Do you see how much the mortgage business is doing? You borrowed 230, you pay 266. That's a lot of money. So even it's not a bad thing to have a 30 years contract or 30 years loan. What you need to do, if they tell you your loan is 230 and you're supposed to pay on a monthly basis, let's say you are supposed to pay 1,378. Just by adding $100 or $200 per month, just any extra money you get your tax return. Let's say you get tax return 3,000, take 2,000, put on your mortgage. Trust me, you might reduce a lot of years. There is one theory which I heard, which was very interesting, and I mean, I knew, but it is not just like if you put it this way. It says as follows: if you make one extra payment a year of your mortgage, you can cut 7 years out of your 30 years mortgage. A tax refund which you get, and if redirected into your loan, can take up to 84 months of your loan. But remember, this amount you are going to pay should go to pay on your interest, not, I mean, should go to pay on the balance, the principal balance, not the interest. So what you need to do is to make sure that when you get, for instance, your tax return, you just take and pay on the interest. Don't pay on the mortgage. I mean, you pay on the principal, not on the interest. You can take off a lot of time. So here I'm going to show you Ramsey, Gordon Ramsey. I mean, Ramsey is the made this. We all know that he has a lot of information about everything you need to know, basically, about money, all these kind of things. So here there is a mortgage calculator. So let's take the home we are talking about is 230. So let's put our 230,000. That is the home. Let's say your first payment was January 1st, 2022. That was the first. Number of years is a 30 years loan. The interest rate, let's say you get 3.5, which is average. How much you'll be able to pay? So average, let's put quickly way, because when I counted the other, when I put the other amount, we didn't have the interest exactly. What was the interest rate? So if you do that way, it means you are going to pay the total of 371 from, so this amount is going to pay if you get the interest rate of 3.5. So you'll pay this loan until the year 2051, December. So this is where I was explaining to you. So let's say you want to add extra payment. Let's say you can decide to do like this way. Just assume in your loan, you decided to put how much? Each month, you put, let's say, $200 more on a monthly. This is extra payment frequency. You can decide I want to pay one time only, or monthly, or quarterly, or yearly. So let's say you put 200 per month, which if you put 200 per month, per year is about 2,400. When are you going to start paying on this one? Let's say we started paying on March 1st, 2022. So let's calculate how much you are going to save if you do this way. So just by pay each year, if you add $200 per month, which is equal to, if you add this one, you are going to reduce the year for 7 years. You see? So instead of paying up to 2051, you are going to pay until which you reduce 7 years. So let's say you are going to pay just each year, you are going to pay, let's say, 3,000 extra. Each year, you're going to pay on your principal extra 3,000. There is going to be 8 years going down. So you are saving interest, it will be saved. So this interest will be removed because you pay early, you will be saving all those money. So original loan, you were supposed to pay up to this one. Now with the extra payment, you ending up paying this one. So you have saved 33% on your interest. Or you can say, okay, for me, I don't have much, but let me just try. Each month, I add one, just each on a monthly basis, I pay $50 only. If my mortgage is $1,000, I'm paying $1,050, but that $50 is going on the principal. Let's calculate what will happen. It will save 2 years because this is going to remove 9% of the interest. So this is how you can be able to do in that particular way. Yes, when we get the tax return, we want to enjoy, we want to do something else. Just assume you do something, you get maybe 10,000 one time only, you pay that one. Each year you find, I know we don't have that money, but I'm just saying, you can save that amount if you have opportunity to pay extra that amount. I'm looking myself. I've been getting some money here and there for YouTube. So my goal now is my loan amount. Let's go to the original amount. Let's say my loan amount is about this one, 160,000. Let's say this is how I pay. I'm giving example. This is how I pay. I'm giving example. This is not my number. So my number, this is what I'll be able to pay. So let's say my extra amount, I decided, okay, because I get my YouTube money, let's say each month, let's say I put $500 extra. All the money I get on my YouTube, I find a way to get 500 to put on my not yearly. I put this one on monthly. So if I do on a monthly, you see, I reduce my loan amount for 16 years. Just by saying my YouTube amount is only going to pay for my mortgage. It will be added amount on my mortgage. So that means I can save all these 16 years. So I'll pay my mortgage for 14 years instead of 30 years. That's what we mean, like finding a way to pay off your mortgage. So no matter whatever the amount you have, even if it will be $75, just put that on a monthly basis. You see, it is going to save you. So $75 per year is how much? So just by adding $75 times 12, just by adding 900 on your principal, it helps you something. So what you do, you need to do, find a way to find another frequency, no matter how small, even if it will be one time only, you get one time only, let's say one time only, 2,000. It's better than nothing. It reduces, just if you pay 2,000 only and not nothing else, it will reduce 7 months from your that amount. Let's say you say I pay 5,000 only, just one time in the period of 30 years, it will save you almost nearby 2 years. So no matter, don't ignore yourself, the power of small amount, even if it's $20, add the $20, put it there, $20 each month. If you put each month for how many years you're going to put the $20 extra, it is going to reduce a certain amount. So anything is better than nothing. So that is what I want to share with you, something which sometimes we take for granted, but it is a very good way. So, and especially for us as immigrant, we don't go to read this more. We assume when we get a home loan, that's all. My home is just this amount, I paid this amount for 30 years, but in the end, you are paying them over a lot of money. So this is 198,000. If you pay this amount for 2 years, for 30 years, you're going to pay nearby 400,000. So find a way to reduce the amount. That will be something for you to consider so that you can be able to survive. Thank you so much. And all the best, everyone. Try to find a way to use your money wisely.